Hello, everyone. My name is Andrew Hunt. I am your host for today. I'm also the founder at the Bovine, and we appreciate you joining with us. The subject for today's webinar is a very popular one, the Economics of Genomics. And we are honored to have Cheryl Marty as our host, as our presenter today. Cheryl comes from a wealth of experience, both from the AI side, but also since joining Pfizer and Zoetis in the working with herds of many different sizes on how to leverage the technology as well as how to maximize their return on investment. With that, I will pass the presenting role over to Cheryl.
Okay, well, thanks everybody for joining us. Sorry about the technical challenges there. Thanks for joining us for our fourth webinar to learn about the second most commonly asked question about the economics of genomic testing. As Andrew mentioned, my name is Cheryl Marty and I'm with Zoetis. I've been very fortunate to work with hundreds of dairy producers discussing clarified genomic testing, part of which the discussions have always come around to this economic discussion. So today, this is the fourth in the series of 7 topics. The first 3 are laying the foundation for this webinar, and you can always go back and listen to those on the Bovine, and you'll see there'll be 3 more following this one, but today we'll focus on the economics. Next. To share with you the journey and understanding behind some of the various economic considerations to genomic testing, I'm going to first ground you with some basic concepts and assumptions. But the majority of the session is going to be really focused on 2 economic pathways that are related to genomic testing. One is considering a strategy that can improve your cash flow and inventory situation. And another is to use genomic testing information rather than alternatives like parent average to make some of the same decisions. I'll also discuss some other factors that have economic value but are sometimes really difficult to measure the economic impact. Next. So I wanted then to, first of all, share you something that I heard from a former colleague of mine, Ian Biggs, who was CEO at Genus ABS Global and also was president of the Pig Improvement Company in the Americas. So he has some background in both in the dairy and the swine industry. And he points out in the quote here that improving efficiency does not stop economic cycles, but it does separate the winners from the losers in those down cycles. I think that's a really important thing. So as we think about improving efficiency, how do we do that? Well, genetics is one of the most important things in both the swine and dairy industry to do that. And genetics, if you think about all the things that you do on the dairy, genetics is the only thing that is permanent and additive that I can think of making this even more important. You can't change a good or bad decision. It's really permanent. So if we go to our first assumption, I want you to first state a few of these assumptions that I'm going to use throughout the presentation. One is that each herd situation is unique. So I can't possibly cover all the possible situations that I might encounter today. But what I will do, if we go to the next slide, is I'm going to share with you our best estimates based on financial and genetic progress models, based on common reliabilities on animals that I've seen before and after genomic testing, and all using commonly used strategies on the dairies. I'm also all of my examples here that I'm going to use will be based on perfect parentage, which, as we know and have learned, is definitely not true, but rather we see sire misAD alone being approximately 15% of the animals. Therefore, the economic values that we're going to present in all of these figures and examples will be very conservative. We also learned in our second webinar that heritability can actually be higher within better managed herds. And so for herds with above average management, our economic estimates will again be very conservative. So if we go to our second assumption then, is that we are going to assume that you will use genomic results. Okay, next slide. And we had a discussion in our third webinar that reviewed the various strategies that can be used to increase the choosiness or selection intensity on your dairy, which really is pivotal to determine the speed of your genetic progress and the profitability. The more choosy you can be, the faster and greater your genetic progress is going to be on your dairy. Next slide. Our final working assumption is that we can then evaluate the genetic economic values through multiple avenues. Next slide. And we're going to spend, again, our majority of time on the first two bullet points shown here. First, we can demonstrate the economic value of genomic testing all young females of a given age using a replacement inventory management strategy. Secondly, we can also demonstrate how much improvement in profitability can be gained by using genomic test results rather than using parent average or choosing to not make any change in your selection strategies for your females on your dairy. And we're going to finish off then with a short discussion about other valuable benefits that genomic testing allows, but are again very difficult to measure. Next slide. So let's then get started by evaluating the economic value of genomic testing all young females of a given age using a replacement inventory management strategy. So next slide, please. So these are two inventory management strategies that can improve cash flow. The faster option is identifying and selling the bottom end calves in a dairy based on genomic results. Now I'm going to spend a lot of time here and show you some information from a financial study that we did with AgStar Financial. Another option we see some herds manage successfully is incorporate, if you go backwards yet, is incorporating a beef use strategy in our breeding programs. So we've not evaluated this yet as a whole herd financial model, and therefore we'll not discuss this one further, but I just want to mention that here and the strategy can also work so long as you, number one, first take care of your dairy needs first and have an excellent reproduction program, because you still need to produce some extra animals to make sure this all functions properly. Next slide. If you want to first of all understand the replacement costs in a dairy and how genomic technologies contribute to our ability to control those costs, we need to start examining those factors that drive the cost of production. Of course, you know the major drivers of cost of production are feed, labor, and replacement costs. But really the first two are probably the most, no surprise to most people, but the replacement costs are actually often not considered as drivers of the cost of production. We've just taken it as it goes. But in many dairies, the replacement costs are very similar to, or sometimes even greater than, our labor costs. So therefore, producers might be well served to investigate ways to control that cost of production by improving the control of replacement costs. Next slide. Our heifer raising costs are also high and volatile. So in addition to the costs of all the inputs that you have to develop a heifer, all the feed and so forth that go into her, we must also consider that that heifer's own value represents an opportunity cost that we had chosen to sell her as a calf. So in 2011, for instance, the total investment that AgStar Financial Services customers saw was between $1,600 and $1,900. And the next question is what it would cost to produce a springing heifer. Well, in most parts of the country that same year, this would have been about $1,500 to $1,800. You really have to ask the question, what is the potential for profit from raising those heifers or selling extra heifers prior to freshening? And these really calculations would suggest that the opportunities are very minimal, and if at best inconsistent, and sometimes you go backwards. So while these values are from 2011, the values and differentiators are very similar today as they were in that time period. But really the bottom line is that in most years, 9 out of 10 years or so, in talking with AgStar, most producers should not be raising just any heifer. Just as you hope to be very selective in the employees that you hire, so should you be selective in which heifers that you raise. Okay, next slide. Another way to look at heifer raising costs is by determining how long it actually takes to recover the cost of raising that heifer. Again, on the left-hand side is using the 2000 values again from AgStar Financial from their customer base. What are the similar economics today? We look and see that a cow must produce about 31,000 pounds of milk before she's actually recovered the cost to raise her. So to achieve this, most cows are in their second lactation. In a separate evaluation done in 95, oops, at the right side there, done in 1995 by Ferguson and Galligan, they have a very similar result. We can go back one slide, please. In the graph to the right, to go backwards again one slide. Thank you. In the graph to the right, it's going to illustrate that by representing a dairy animal's life in a series of cash flows, the green line represents the daily cash flows. So you can see in the first 2 years of life, basically, the animal is in a negative, as you'd expect. The blue line then represents her cumulative return. So you can see that it continues to increase the cost until she has a calf in her first lactation, when those revenues start coming in. And here again, the point at which that blue line crosses the zero is when she transitions from a cow, still trying to pay off her development costs, and really again, it's in that second lactation sometimes. Okay, next slide. So really, it takes a long time to recover those costs to raise heifers, and especially in these tough economic times, it's even more important to make sure that we're raising the right heifers. So given that we have the impact of replacement rate on the net herd replacement cost, and the early questions that I receive very often, and how does this technology financially benefit dairies in the short and medium term? We again worked with Extra Financial on a whole herd financial analysis that compared 2 selection strategies. And this is using data from real-life commercial dairy of about 1,000 cows. The first strategy was designed to where the herd kept 100% of available heifers as replacements, and they just increased their culling rate in adult herds to accommodate that additional inventory with a static herd size. So they just kept their cull rate at whatever it was. They had a static herd size of 1,000. Strategy 2 was where they only kept and retained 85% of the available heifers and used clarified testing using just the milk information, which was purely done just to keep this economic analysis easy and more straightforward. Therefore, they were selling their bottom 15% at 4 months of age, and then matching the culling in the adult herd to yield a static herd size. And again, this is just a scenario we did. Doesn't mean you have to be at 15% culling and doing it at 4 months of age, but that's what we used. That was common possibility when we did this evaluation. So if we go to the next slide, you'll start to see some of the assumptions that we used in this financial model. Again, this was a 1,000 head herd, a fixed herd size. They were not expanding, and it was a real dairy. It was the real dairy financials and their inventories and so forth. All the heifers were custom raised from birth to 2 months prior to their calving. So basically, they were raised off the farm. Again, that was done to keep the cost consistent from month to month and or age to age, and there was no agronomy enterprise. So feeds are purchased at market value. So we basically tried to take out any of the inventories of feed, the agronomy enterprise, all out of the equation, so it was a very straightforward cost per day analysis from a perspective of feed, breeding costs, and so forth. So in our second strategy, the only difference we did there was that we also used a $54 per head genomic testing cost. So that was partially the cost of the test and some labor that we figured in for lifetime use and use of the data. So the graph then shows here on the bottom that how we actually kept all the heifers in this strategy, one on the left. You keep all the animals. So some animals to the left of that graph are your worst ones based on the breeding value for milk. The ones on the right are your best ones. You see more of your animals are in the middle, your bell-shaped curve. On the second graph to the right, you can see that what they did is now the second strategy, we just kept the best 85%. So we eliminated the portion that was in the green. And so that's how we ran the scenario. Next slide. This graph is going to first now map out the inventories of the different types of dairy animals on the farm over this 4-year period that we projected forward. And you'll note in both scenarios that we actually kept a constant adult herd size of about 1,000 cows. So that's your middle line all the way through there. But there are also a couple of important differences in how the herd composition evolved. First, you need to note how the number of the first calf heifers relative to the number of lactating cows, so your orange section versus your green section, related relative to the total numbers. So you can see in the left, the number of female first lactation heifers was pretty constant. It was about 43% of the herd. And that is really close to the cull rates that I see in a lot of dairies, which has been running in that 42-45% range area. Makes sense, right? So when you do a selection scenario on the right, where you're managing your heifer inventory and you're eliminating those bottom ones based on the genetic information, you can now see that the percent or the ratio of the first lactation heifers are showing, and it decreases down to about 36% of the herd. And that's a good thing, because if you think about it, how much more milk do those second and older lactation cows give than your first? And it's quite significantly different. So the other thing that you'll notice in here is the number of, oops, go back to the inventory again. The other thing you'll notice in this graph is that in the blue section, those are the number of total heifers that are raised on the dairy. We'll start with the right-hand graph this time. You can see now we have a very consistent number. We've got about 790 heifers raised each year. And so you're basically very constant. You don't have to deal with ups and downs. Whereas on the left, if you just continue to raise all the heifers and not manage your inventory on the heifer side, let them all calve in, that number continues to grow. You can see by the end of year 4, which is estimated out here in 2015, instead of 844 heifers in 2012, now they have 952 heifers that have to be supported by 1,000 cows. And that compares to 791 heifers in our second scenario, our 85% retention scenario, that have to be supported by 1,000 cows. So you can already start to see the dynamics forming here, just how that all takes shape and how that changes the potential income and cash flows. Now we'll go to the next slide. So then we did look at the net income and cash flow. And this is the net income graph. The left-hand chart is showing you the individual years and the advantages or disadvantages of using clarified at the 85% retention scenario versus raising all of the animals. So in year 1, you can see that due to the additional cost of clarified and additional labor, there was a negative value. But by year 2, we've more than compensated that, and you can see in the cumulative graph on the right-hand side, the blue bar now is higher than the green bar. And if you actually project out to 4 years, if you want to click the advanced button once, you can actually see that there's a $169,000 difference between the clarified scenario versus no change at all. So that's significant if you think about the income and so forth that is on your dairy. Our next graph here now, our next chart is on the cash flow. And for this is another important component of profitability. And actually, most people this is even more important than just the income. This is where those at AgStar Financial, when I met with them, they weren't surprised to see the positive in all of these numbers, including in year 1. So that was the surprise to me, but it wasn't to them. And in fact, the 100% heifer retention scenario, if you go out 4 years in the green bars to the right-hand chart, you can see the actual negative drain that the cash flow is occurring. And if you think about that, it shouldn't be a surprise if you remember that the heifer herd size was much larger and getting larger in comparison to the adult size herds. And literally, they're eating away the herd's cash. So imagine what you could do with that extra cash and then improve your herd efficiency and profitability by removing those animals that have the lowest chance for being profitable in your dairy. And you can see the total after 4 years, the difference in cash flow is $345,000. That's huge. Okay, next. So perhaps here you are considering a heifer inventory management scenario with clarified or genomic testing. The next question is often, well, when is the best time to do this? When should I sell a calf or a heifer? Here again, we have a model developed by Dr. Dave Galligan in Pennsylvania that we can use to help you determine that more ideal time. And if you use more common values today, some of the inputs that I listed on the left-hand side is the returns, and you use the inputs in the middle in the graph on the cost per day and the different ages and so forth. The chart in there then will demonstrate just where is the circled area there is the where they're actually getting the most profit per month if they sold based on this scenario. So really, at the end of 2 months or 4 months, it was a much better option to sell these offspring than it was to wait and hold on to them for, until they're pre-fresh or breeding age or so forth. But again, it might differ based on different scenarios. Okay, next slide. So in summary, if we think about the economics by the strategy, our fastest cash flow is going to be by selling the low-end genomic heifers. Our alternatives to cost to raise those extra heifers is usually far more than the cost to test. Also, we mentioned breeding. These strategies are possible after, again, you've considered and ensured that you're going to have enough heifers for your dairy needs. Okay, next. So now we're going to move into the genetic piece. So we've seen what this can do to manage your inventory, but you could probably do that with using some other numbers. We did use genomic testing in there, so it is figured into that as well. But I want to just focus now on the genetic piece. And how do you make faster and better progress by using genomics to make your best decisions? So I show this graph in a couple other presentations, and I like to use it because it's a quick and dirty glimpse of just seeing how genomics can make you money. Okay, you can go to the next slide. And I like this rudimentary look because it's based on earlier information that shows you, how quickly you're recovering the cost of replacements and so forth. So we've got to think about managing inventory. So under those assumptions, we evaluated an early testing sentinel herd to see what % of the animals were still milking 3.5 years after we initially tested the animals that we initially tested. They were first tested at first lactation, 60 days in milk. This puts them into roughly close to 5 years of age. We then broke the herd into genomic net merit dollar quintiles, with the worst ranking net merit dollar animals in group 1 to the left, all the way up to the best 20% net merit animals in group 5. And you can see the group average is roughly about 29% of them are still alive after 3.5 years after testing or at 5 years of age, versus the other, if you go to the first group, only 14% of them were still alive, milking, making more calves, all the way up to 50%. Quite amazing, the dynamics that top group is definitely making that herd a lot more money. So one might ask, why are we raising or breeding those bottom ranking animals? So if we go to the next slide, this is again going to serve as a foundation to remember that genetics are just longer term investment. So there isn't a short-term product that can come in and do what we do and continually have to invest in. So genomic test occurs once, and you can use this information for the lifetime of the animal. That's the exciting part. And the decision impacts either positively that you make today on breeding and selection can either positively or negatively influence what happens in the next generations. What's good about genetics is it is a way to measure economics too, because we can tie it directly to our genetic progress formula that you've seen before when we use a profitability trait. Next slide. So to measure the profitability of genomic testing versus other alternatives, it's really important that we use a net present value. That's because, again, genetics are a long-term decision. And what net present value does is it considers the discounting of future cash flows as is appropriate for genetic improvement. Meaning, if I borrow you $1 today and you give me that dollar back to me in 10 years, it's effectively worth a lot less to me at that time because of the interest that I lost, that interest potential I lost over those 10 years, versus if you gave it back to me within a couple of days. So net present value allows for those types of comparisons to other investments, such as no investment or using parent average or expanding your dairy. That is, if you know the value of that expansion. So when you evaluate net present value and you see a positive number, or positive value for a given interest rate, then the investment's a really good idea, particularly as compared to the alternative. If the net present value is negative for a given interest rate, then the investment might need to be reevaluated. Most areas are seeking about an 8% return, which tends to be better and higher than the stock market. So some areas even accept a 6% return in some technologies such as this. Next slide. So when we're modeling the economic value then of genomic testing, particularly versus the alternatives, one should consider that lifetime genetic profit value to measure traits. So we used profitability traits like net merit in the US, or in Canada that's pro dollars. Now, although I don't mention TPI here, it's because it's not a profit-based trait. It is highly related to the ranking of net merit. So economic models then should also measure the impact of reliability and genomic selection with other options. And so we can do that in the, to justify testing all the animals. We'll be able to do that in the model we're going to see next. Okay, next slide. So this graph and model, I have to walk you through this very step-by-step here, is shown, and this is developed with Dave Galligan and Jim Ferguson, again at Pennsylvania. And this uses a genetic progress formula and uses it to determine if strategy 2, which is genomic testing all animals at $45 a head to decide which 10% of the animals to cull, if that is a better decision to make than strategy 1, which is instead to use parent average information to make those same decisions at no cost. So if we click the slide one time, we can directly use and compare the inputs using this genetic progress formula. So to do so, we first enter the appropriate reliability in the square there, which we convert to accuracy for the formula above. In this case, we normally see 25% reliability on parent average for net merit in a lot of the dairies we work with. So that's our base comparison at no cost and no genomic testing, but using parent average to make all the decisions. The strategy then on the right with testing is using genomic testing. Oops, just hang on. So we see an increased reliability of 68 to 70% commonly in Holstein net merits there. So that's where we use that number. Okay, next click is now we're going to be talking about selection intensity, and we we add in how choosy we're going to be in our selection. And in this culling strategy demonstration, we show that we're going to keep 90% of the animals. And we're going to do this either using parent average or using genomic testing on the right. And so this translates to selling the bottom 10%. And again, this is a single strategy, and I'm using the kind of low end of what we normally recommend, so I can show you the dynamics. You click one more time. The next part of the formula then is genetic variation. And this is a measurement we can actually get directly from the Council on Dairy Cattle Breeding. So that value then, if you click again that once for the genetic variation, we can see the value there in our box. We multiply that by 2, the number that we got from CBCB, to reflect the breeding value versus transmitting a value. So this standard deviation value does not change unless the formula or traits that go into that profitability number change. So we always leave that number as is in the model. So click one more time. Finally, we must determine the value of that alternate investment if we then invested instead $45 per head somewhere else, okay? And this time we use parent average instead. So we're entering an interest rate here of 8%, and we look at that over 10 years to reflect that longer term investment. If we actually did happen to change it to 0% interest, we could actually find out what the full genetic profitability improvement would be over a parent average decision. But for here, because we're going to say your money is worth something, we're going to say it's worth 8%, we're going to use that 8% here. So now we're comparing the future profits of genomic testing minus the costs and interest versus the value of investing $45 a head elsewhere at 8% interest, all over 10 years. And our end result here, you can see if you click one more time, is that you indicate the box there shows $13, and that is on a per head basis that is kept. So that's above all the costs, and again, the comparisons to using something that's better than nothing. So in this case, if it's positive like it is, it's going to be a $13 advantage per animal over using parent average for the same scenario. And if it was a negative number, then you might reconsider, but it's not. So you can see 10%, even if you can sell the bottom 10% of your heifers, you can make more money and profit with this scenario. Okay, now we're ready for the next slide. So that slide was just, again, one strategy and one example. We can expand this to determine more of the full value of the genomic testing using a 1,000-cow herd. We can continue to compare it to parent average. So if you click one more time and hold it there, first we're going to compare using clarified testing results and selling the bottom 10%. So that is your $57,000 and 100 roughly there, and that's comparing that to no interest rate. So that's the genetic value and advantage over parent average if you multiply times 1,000 animals. If you then say there's an interest rate there like we saw, that translates into $11,000. So again, you kind of see the dynamics there. This is, again, better than parent average and over the cost that we already have incurred at those interest rates. If we look at the scenario right below that is where it says we're now only going to use a strategy. So maybe we're expanding. If we're expanding, we may only be able to use sex semen strategically. So instead of breeding every heifer to sex semen, now we're going to instead breed the top half twice to sex semen and the bottom half once, to conventional semen. These are the numbers that you get. So again, the genetic improvement that you get profitability-wise is almost $45,000. And then if you even put in an interest rate that's going to cost money to invest to do that, it's still a positive number. So again, very much better than parent average. And the neat thing about all of this is if you use more than one strategy, so let's say you first decide to keep or sell a calf, and then you use it as a heifer to make breeding decisions, you actually don't just add those numbers up. It's actually a much bigger number than that. So the bottom right-hand corner is $56,000 more on an 8% interest comparison because you don't have to include the cost twice. You pay for the test one time, and you can use it for a lifetime of an animal. That's huge. That's huge for the dairy. Now that's all, again, comparing parent average. And in the left-hand part of the graph, I skipped over if you want to click through here. The genomics versus no strategy. Let's click one more time, sorry. And in the no strategy, again, it's kind of the same concept, but this is just saying, I'm not even going to do any selection. I'm not going to do genomic testing. I'm not going to use parent average. This is the difference between if you're doing the strategy with genomic testing and your neighbor is not. This is the profitability advantage that you would have over those 10 years at 0% interest. You can see if you did both of those strategies versus they did none, $342,000 more genetic advantage that you have. Or if you use an 8% interest scenario, it's $157,000. You're way out ahead of your neighbors. So again, now you can start to see why this is such an important technology. And this just gets bigger and bigger and bigger, much like a 401k may grow and expand if you're the first to invest versus a friend of yours that may not invest in your 401k sooner or as soon as you do. Okay, next slide. So the next slide, we've seen all these models, and now I'm going to actually use a real herd, and this is a comparison that we evaluated for a herd that had asked the question, well, maybe I should partially test. I've been doing this for quite a while. And scenario one is really the plan that he had in place. He's going to keep genomically testing all the heifers with the different strategies that he's got in place, and I'll describe those later. And in scenario two, he's going to follow those same strategies, but he's only going to genomic test the top 10% based on the parent average net merit dollars, and then he'll use parent average information for the rest of the decisions. So next slide is going to start to show you the results of this. Again, this is a 1,000 cow dairy example for simple math. And the values used here are going to first of all reflect the corresponding value for the given scenario. So it's either going to be parent average or genomic data, depending on the scenario 1 or 2. And the data that's used in here was used after parentage corrections. So again, the numbers here, the gap between the scenario 1 and 2 would be even wider if we had used this before parentage correction. This herd had about an 8% misidentification. And this also only reflects one generation, which grossly underestimates the value of genomic testing and genetic selection in general. So how this herd used genomics is, you can see here in the decision part of the graph, the first decision they made was what they're going to keep just the better replacements over keeping everything. So they were selling the bottom 10%. So scenario 1, they did this based on genomic information, and in scenario 2, it was a combination of some genomic results and some parent average. So that yields results of $47 with genomic testing. That's compared to no strategy at all. And you can see, yes, you can make some progress with partial testing as well, and that's in scenario 2, but it's not nearly as much. Then if you go to the other 3 decisions they commonly make, so they're also making breeding decisions. So I put in calf 1 for the difference that you gain just in, again, one generation, having one calf, and you can start to see they had some sex semen and also embryo decisions that they made there. And you can see, again, the gap between scenario 1 and 2 starts to form. And if you then add all those numbers up, and again, it's one generation per animal, you can see there's a difference compared to using 100% genomic testing is $230 compared to no scenario, or scenario 2 is $147 versus no scenario. So there's a gap there of about $80 some. That's quite huge per animal that's kept. So if we multiply that out times 900 animals that they did keep and run this through, you can start to see the numbers there. And then you subtract out the investment for those 1,000 animals that they started with that they're going to test. And you can see that by far the winner of that whole scenario is scenario 1. So it does pay, and it does give you many, many options to continue to implement this as a whole herd strategy and make this a lifetime genetic decision on the female side. Okay, next slide. So there's a lot of ways that you can implement genomic data. We saw this earlier. So one decision is to keep, buy, or sell. Another decision is those many breeding decisions that you make every day, and that's an average of 3 pregnancies per animal. You know, what type of bull are you going to use? Are you going to use sex semen? Are you going to make a donor? Are you going to make him a recip? Are you going to use some semen to target the beef industry? The mating programs, all of that goes into there, and also you can make later life decisions. The bottom line, the more that you use genomic information, the more you're going to get out of it. So if we go to our next slide, then we start to get into our summary. So in summary, the economic models here demonstrate that there's great gain in genetic progress and profitability. And if you go to the next slide, please. And so by using that genomic testing of all the young heifers versus aligning, just using the parent average to make those selection decisions. Can you go to the next slide, please? And also using an aggressive embryo program might provide the fastest genetic progress, but it has a larger upfront cost. Next on down the line is selling the bottom end animals, and that's generally the best return and so forth. But really the real herd data validates these types of gains as well. So in general, the economics versus by improving the genetic part of things is genetic gain compared to no change is even greater than using genomics. So we've only shown those compared to parent average primarily. But again, if you don't even do anything, you're not going to make the progress that you could. So the more frequent that you use genomics, the more profitability that you're going to have. Finally, herds with better than average management. Again, we mentioned early on that those herds are going to see even larger gains in all of these estimates that we're showing today. Okay, so that's the genetic piece. Now we're going to talk about economics by other methods. We go to one more slide. So there are some things that are very difficult to measure that it might also find value for your dairy. Number one is real simple. It's just simply correcting the parentage mis-ID that you have going on. And the benefits to that is that you can reduce the risk, such as inbreeding, such as matching recessives that are the same on the sire and on the female, that can oftentimes result in a dead calf or no pregnancy. Another way that might that might add value is a mating program use, and we know there's opportunities there in the future. We also know that sometimes we crowd those calf pens a little bit too much, and just by eliminating and right sizing those heifer pens to a more to a better environment, that's actually going to improve the animal health and reduce the cost of things such as the drug costs and so forth. Another economic measurement that might be hard to value is just what is the advantage of having less manure, right? How does that lower environmental load going to impact your dairy if you're managing the inventory? So those are some things that you might also find important for your dairy. So in summary, have a female genetic selection strategy. We can't mention that enough. Genetic gain is also a long-term investment and a commitment, so it should be a consistent process. It's not really meant for stopping and starting, because that's going to diminish the herd improvement and the processes that you have in place on your dairy. Genomics is a better way to make strategic and efficient decisions on a dairy, thinking back to the quote from Ian Biggs, as compared to alternatives. And we have net present value models to justify the decisions economically for most single strategy decisions, and it gets even bigger once you use it more than once. Next slide. As a final reminder, efficiency, if you think about that, that is such a key, especially in these tight times. It's never easy in a dairy, and this is one way to help you ensure that you're investing in the right animals. Shorter term, also cash flow can also improve with inventory management strategies. Again, the more that you sell, the faster the return and gain, the less feed, manure, health, and AI costs you'll have. And the revenue from the calf sale could also be part of that, but I would say don't expect much on that piece of it. That's really not the value of this. The value is in what you're saving on all the other things above. And all herds really realistically could sell at least the bottom 3 to 5%, even expansion herds. Those animals just have an extremely low chance of ever making it beyond that first lactation or even the first 100 days in milk. So the more you use genomic information, the more profit and efficiency that you can gain for your dairy. So I'd just like to mention the next session that we'll have. And one more slide. We'll next be talking about how you put your genomic testing results to work. And we're going to highlight some of this information within Enlight, which is our online tool for the Holstein breeders. And that's, if you go to one more slide, so that webinar will take place on November 4th. And then following that, we'll have 2 other webinars. One will be talking more beyond phenotype, thinking about genomics versus size-based traits, such as average daily gain. I think you'll find that extremely interesting and something that nobody else has. And also making genetic progress in low heritability traits. So those will round out the year and into next year. With that, I will, Andrew, open it up to questions.
Okay, and I was just compiling the questions here, so I will start going through them. There's 3 or 4 here to go through. First question comes in, is there a difference in TPI, or I know you mentioned net merit or pro dollars, that makes sense for culling second or milking cow versus a heifer? So is there a minimum, like say there's only 100 TPI points as the example I was given, but maybe even just 20 net merit points, is it worth culling that lactating animal versus a younger heifer for such a little difference?
Yeah, actually, I think it's really important to think of animals in their different age groups. So if you're making culling decisions in on a dairy with genomics, I would do it primarily in the heifers or the calves. Generally, the calves, the sooner the better. As a cow, you're going to have a different population, so I would compare it to any adult animal. If you do have the luxury of doing some culling, you know, it's going to end up being some of your older cows, but I would make sure you take the phenotype also in mind once you get to the lactating herd. In those culling decisions, particularly in a calf or heifer, that is where you would compare them within their specific age group so that you're calling and maintaining, let's just say 80 to 90% of what you originally have. Some herds actually try to level out their inventory, so some months they might call 10%, some months they might call 20% if they have more extra calves born in that particular month, and some it might be 5%. So it kind of averages out to that 10 to 25 range in a lot of dairies. But again, the biggest thing is always compare within the age what is that difference and base it off of that. There's really no hard number that I can give you for something like that.
Okay. And then it says, as your cull rate goes up, does your profitability go up? And then it ties to another question. Is there an optimal cull rate?
Well, that's a loaded question. There's lots of discussion in the industry on that. I think bottom line, you've got to think about what you want to have a good proportion of your dairy with the cows that are, that are living a long time because they've paid for themselves. You also want to keep refreshing your herd. So in discussing this with some economists and some of those, the Albert DeVrieses and Dave Galligans of the world, it seems like the cull rate most people are comfortable with is in that mid-30s to no more than 40. Again, it depends what the culling is for. I mean, if you're not culling enough and you're in the 20s, sometimes that's not healthy either. So there is that sweet spot for each dairy, and it might differ a little. But in general, we're going to make some genetic progress, but we also need to manage the inventories that we have in our heifers, and we also need to think about the production output that we're actually getting from those higher lactation cows. But as we start to I think, select also more than milk, we're picking, really the profitability doesn't come from milk, it's really from the fat and protein volume. And it's also from the breeding a cow back and getting another calf out of her and having her live longer and not having a lot of health events. Those types of the cows are going to be the most profitable, and that's really what we're looking at. That's why these index traits like net merit, TPI are, I think, really important to look at versus a single milk value or something.
Okay. And another question is, what is the optimum age to collect samples for testing in a herd that calves year-round?
It will depend when you are going to use the information. So I generally tell people if you're going to make a heifer breeding decision, let's say you start breeding them at 13 months, start the genomic testing at 11 months roughly. Do it at least 2 months ahead so that you make sure you get the results back, and then you also have some time to look through them and make your choices. If you're going to sell a young calf, then I tend to say, collect them at birth. It's going to be easier to collect it right away then as compared to crawling into the calf hutches or wherever you might have them. Or do it where it's easy, as part of a process that you normally do. Let's say you're vaccinating at, a certain age or breeding age or something. But do it again, make sure you do it at least 2 months ahead of when you're actually going to start using the information for the first time.